In accounting, a credit note is a document issued by a seller to a buyer, indicating that the seller is crediting the buyer's account for a certain amount. This typically occurs when there's a discrepancy in the amount owed, such as an overpayment, a return of goods, or a discount given after a sale. Here's a detailed breakdown. 1. Purpose. A credit note serves to adjust the amount owed by the buyer to the seller. It essentially reduces the buyer's accounts payable and increases the seller's accounts receivable. 2. Contents. A credit note typically includes the following information: date of issue, unique identification number or reference, name and address of the seller, name and address of the buyer, description of goods or services being credited, quantity and unit price, if applicable, total amount credited, reason for the credit, for example, returned goods, overpayment, discount, any applicable taxes or discounts. 3. Recording. When a seller issues a credit note, they credit the buyer's account in their records, reducing the amount owed by the buyer. On the buyer's side, they debit the seller's account, acknowledging the adjustment in their accounts payable. 4. Impact on financial statements. Seller. The issuance of a credit note reduces the seller's accounts receivable, which in turn affects their income statement and balance sheet. It may decrease revenue and assets depending on the reason for the credit note. Buyer. The receipt of a credit note reduces the buyer's accounts payable, impacting their balance sheet. It may decrease liabilities and improve liquidity. 5. Legal considerations. Credit notes may have legal implications, especially in cases of disputes or incorrect billing. They serve as evidence of the agreed upon adjustments between the buyer and seller. 6. Accounting treatment. Depending on the accounting system and standards followed, the recording and treatment of credit notes may vary slightly. However, the fundamental principle remains the same: to accurately reflect the financial transactions and obligations between the parties involved. Overall, credit notes play a crucial role in maintaining accurate accounting records, facilitating transparency in financial transactions, and resolving discrepancies between buyers and sellers.